Germany is facing an alarming rise in bankruptcies, and the numbers coming out of the Federal Statistical Office, des Staates, paint a grim picture of the current economic climate. You can almost feel the pressure building across industries. In November alone, insolvency filings jumped by 12.6% compared to the same month last year. And this isn't just a one-off spike, it's part of a worrying trend. Since June 2023, double-digit year-over-year increases in bankruptcies have become the norm. The situation is even more striking when you look at the year so far. Between January and September 2023, 16,222 companies filed for insolvency. That's not just a number, it's a 22.2% increase from the same period in 2022. Think about it, that's thousands of businesses, each with employees, suppliers, and customers, folding under economic pressure. The last time Germany saw this level of corporate failures during the first 9 months of a year was in 2016, and back then, the economy wasn't contending with today's complexities. But it's not just the volume of bankruptcies, it's the sheer scale of financial damage. Creditors are looking at 45.6 billion euros in unpaid debts for 2023. That's more than double the 21.1 billion euros recorded last year. Imagine the ripple effects of that kind of financial burden: credit lines drying up, suppliers unpaid, and investors pulling back. These aren't just statistics, they're a reflection of the heavy toll on the business ecosystem. And it's not just companies feeling the strain. Personal insolvencies are rising too. Over 53,000 individuals declared bankruptcy between January and September 2023, a 6.8% increase from the previous year. It's a reminder that behind these corporate numbers are real people, struggling with inflation, rising living costs, and tighter credit conditions. For some, it's the aftermath of pandemic-era challenges they still haven't been able to shake off. What really hits hard is the projection for the future. Credit Reform, a prominent credit services firm, expects 22,400 companies to declare insolvency by the end of this year. But next year's forecast is even more unsettling. They're predicting 32,000 corporate bankruptcies in 2024. That's a sobering thought. If this trend holds, Germany could be entering one of its most challenging periods in decades, and the ripple effects could spread far beyond its borders. Some industries are especially vulnerable. Transportation and warehousing, for instance, are being squeezed by global supply chain disruptions and volatile fuel prices. The construction sector, often a bellwether for economic health, is grappling with skyrocketing material costs and higher interest rates that are making projects less viable. And then there's catering, an industry that's been hit hard by shifting consumer habits and the lingering effects of the pandemic. These sectors are like the canaries in the coal mine, signaling deeper systemic issues. What's happening here is a wake-up call. Germany, often seen as Europe's economic anchor, is under significant strain. High energy prices, persistent inflation, and rising borrowing costs are creating a perfect storm. And it's not just businesses feeling the pinch, households are struggling too. You have to wonder, how much longer can this go on before we see broader societal impacts? Policymakers have a tough road ahead. The question is whether they can step in effectively to stabilize the situation. Should they target specific sectors with support measures? Loosen credit access to help businesses survive? Or perhaps focus on long-term strategies to make the economy more resilient? Whatever they do, time is of the essence. This isn't just a German issue, either. As Europe's largest economy, Germany's troubles could have a cascading effect on the EU and even the global economy. A surge in bankruptcies here could tighten credit markets, disrupt supply chains, and dent investor confidence worldwide. It's a reminder that in today's interconnected world, no country's economic struggles happen in isolation. The numbers are daunting, but the stories behind them are even more compelling. Every bankruptcy represents a business owner's dream lost, employees left without jobs, and families facing uncertain futures. It's a sobering reality, and it demands urgent action. Whether Germany can weather this storm remains to be seen, but one thing is clear, the stakes couldn't be higher. In the heart of Europe, Germany, once the stalwart powerhouse of the continent, has begun to show signs of strain, and it's not just a matter of abstract economic numbers. As the winds of economic uncertainty sweep across the country, they're leaving a trail of shattered businesses, dreams unfulfilled, and workers wondering what happened to the stable future they once believed in. It all started innocently enough, with small warning signs here and there, the occasional bankruptcy filing, a few companies announcing cutbacks, some industries struggling to recover from the effects of the pandemic. But fast forward to 2023, and the signs have become undeniable. The German Federal Statistical Office, des Status, reported an alarming 12.6% rise in insolvencies for November, compared to the same time last year. On the surface, it might seem like a bad month. But dig deeper, and a troubling pattern emerges. Since mid-2023, year-over-year bankruptcies have been steadily increasing, each month adding another chapter to a story that no one is eager to write. The year-to-date figures are even more alarming. Between January and September, over 16,000 businesses threw in the towel. That's not just a handful of struggling companies, it's a 22.2% increase from the same period in 2022. Imagine 16,000 companies, each with its own story, its own set of employees, suppliers, and customers, all buckling under mounting pressure. Many of these were once small and medium-sized businesses, the backbone of the German economy. A bakery that had been in the same family for generations. A logistics company that once boasted a fleet of trucks crisscrossing Europe. And a construction firm that had completed major projects across the country. All now gone. The once vibrant economy of bustling towns and thriving neighborhoods now dotted with empty storefronts and shuttered factories. But the true weight of this crisis isn't found just in the number of businesses that are failing. It's in the staggering 45.6 billion euros in unpaid debts creditors are left to face. This isn't a small amount. It's more than double the 21.1 billion euros owed in 2022. Picture the consequences of this amount of financial damage. Credit lines dry up, banks tighten lending, and suppliers refuse to extend terms to companies already struggling to stay afloat. It's a vicious cycle. One bankruptcy leads to another, and soon the entire economy starts to feel the effects. And yet, the effects aren't limited to just businesses. In an unsettling twist, personal bankruptcies are also on the rise. Over 53,000 individuals filed for bankruptcy between January and September 2023, a 6.8% increase over the previous year. For many, this isn't just about losing jobs, it's about watching a lifetime of savings, dreams, and hopes evaporate. People who once had a sense of financial security now find themselves scrambling to survive, as inflation, rising living costs, and ever-tightening credit conditions leave them with no way to keep up. But what's even more concerning than the present situation is the future. Experts like Credit Reform, a leading credit service provider, are predicting that 22,400 companies will fail by the end of this year. But that's not the end of the story. 2024 looks even worse, with projections reaching 32,000 corporate bankruptcies. This isn't a minor blip on the radar. If these predictions hold true, Germany will face a year of unprecedented business collapse, and the ramifications will stretch far beyond its borders. The ripple effect could destabilize economies across the European Union and even send shockwaves throughout the global market. What's behind this crisis? Some industries are particularly vulnerable. The transportation and warehousing sectors, for example, are still grappling with the aftermath of global supply chain disruptions and rising fuel costs. Meanwhile, the construction industry has been hit hard by skyrocketing material costs and high interest rates, making new projects nearly impossible to finance. The catering industry, once a mainstay in every town, has struggled to rebound from the long-lasting impacts of the COVID-19 pandemic, with changing consumer habits making it harder to stay afloat. The truth is that Germany's troubles are not isolated incidents, they are part of a much larger, interconnected story. As Europe's economic engine, any crack in Germany's financial foundation sends shockwaves through the entire continent. And in today's interconnected world, those ripples can extend far beyond the EU. A wave of bankruptcies in Germany could tighten credit markets, disrupt global supply chains, and lead to a loss of investor confidence that spreads across the globe. The consequences of Germany's economic woes will be felt everywhere, from the small businesses in Spain to the multinational corporations in the United States. So, where does this leave the average person, the worker, the small business owner, the family struggling to make ends meet? Each bankruptcy represents more than just a financial loss, it's a personal tragedy. A bakery owner who has poured years into perfecting his recipes now faces the crushing reality of watching his life's work collapse. A young professional who thought the dream of homeownership was within reach now faces the uncertainty of a job market that is growing increasingly unstable. But in the face of this growing crisis, there is still hope, if the right actions are taken. Germany's policymakers are under immense pressure to respond. Will they step in with support measures for struggling sectors? Will they find ways to loosen the credit market, so businesses can stay afloat a little longer? Or will they focus on long-term strategies to make the economy more resilient? The clock is ticking, and the decisions made in the coming months will shape the future of Germany's economy for years to come. The stakes are higher than ever. The world is watching, waiting to see how Germany will navigate this storm. Will it weather the crisis, or will it become another cautionary tale of how even the strongest economies can falter under the weight of unforeseen challenges? Only time will tell, but one thing is certain, the story of Germany's economic struggles is far from over, and its resolution will impact us all. As the months roll on, the tension in Germany's economic landscape continues to mount. Businesses are bracing themselves for a future that feels more uncertain with each passing day. Workers are growing anxious, wondering if their jobs will be the next to be eliminated. And the government? Well, it's walking a tightrope, trying to balance immediate crisis management with the long-term need for structural reform. In the face of these challenges, some businesses are turning to creative solutions to survive. Small startups, in particular, are stepping up with innovative models, finding ways to streamline operations, cutting unnecessary costs, and leaning into digital transformations that allow them to maintain a competitive edge. In a way, the crisis has forced them to rethink everything. Many are relying on e-commerce platforms to reach new customers, embracing remote work models, and exploring niche markets that might have once seemed too risky. But these small wins are few and far between. For many businesses, the battle is much harder. The once thriving industrial sectors, long the heart of the German economy, are now struggling to keep their doors open. Manufacturing companies are seeing their orders dry up, construction firms are forced to cancel projects, and the service industry is feeling the strain from both the pandemic's aftermath and rapidly changing consumer behaviors. The streets, once filled with bustling small businesses, now see more "for lease" signs than ever before. Yet, amid all this uncertainty, there are pockets of hope, places where individuals and organizations are finding ways to adapt. The key to survival is innovation, resilience, and a willingness to embrace change, even if it's uncomfortable. Some companies are focusing on environmental sustainability, capitalizing on the growing demand for green technologies. Others are investing in employee training and upskilling, preparing their workforce for a rapidly evolving job market. Still, others are forging new international partnerships, diversifying their business models, and seeking new markets to conquer. But even as businesses fight to survive, there's a broader question looming over Germany's future. What kind of economic landscape will emerge from this crisis? If the government steps in with the right policies, there's potential for a more diversified, innovative economy to emerge, a system less reliant on traditional industries and more focused on technology, sustainability, and global connectivity. However, if policymakers fail to act swiftly or decisively, the country risks sliding deeper into economic turmoil, with longer-term consequences that could reverberate for generations. The German government is caught in a difficult position. It's clear that immediate support is needed. But what kind of support? Should the state step in with bailouts, providing financial assistance to struggling companies, or would this simply delay the inevitable collapse of unviable businesses? Should there be large-scale investments in infrastructure projects to stimulate the economy, or is the solution to focus on technology and innovation? And then there's the question of how to balance short-term relief with long-term sustainability. Any misstep could push the economy further into crisis, while the right decision could set Germany on a path to recovery. Germany's leaders know they're facing a critical moment in history. The wrong move could lead to further bankruptcies, higher unemployment, and a loss of confidence in the country's economic future. The right move, however, could position Germany to emerge from this crisis stronger and more adaptable than ever before. But beyond the policy decisions and economic strategies, there's an underlying human story that must not be forgotten. The hundreds of thousands of people whose livelihoods are tied to businesses that are hanging on by a thread. The workers whose paychecks are no longer guaranteed. The families whose lives have been upended by inflation and job insecurity. In many ways, the success or failure of Germany's recovery will depend on how well these individuals are supported, both in the short term and in the long run. The question, then, is how Germany, once a beacon of economic stability, can regain its footing in an uncertain world. Will the country's resilient spirit be enough to overcome the storm? Or will it be swept away by the tide of global challenges that show no signs of abating? As the months unfold, one thing is certain: Germany's struggle is far from over. But the story is still being written, and how it ends will shape the future of not just Germany, but Europe and the world beyond. In the end, it's a story of hope, adaptation, and the search for new opportunities in the face of overwhelming odds. And though the road ahead may be long and fraught with challenges, the lessons learned from this crisis will be invaluable for the generations to come. Whether Germany can rise from the ashes of its current economic struggle is a question that will take years to answer. But for now, the world is watching, waiting to see how this once unshakable giant will respond to the trials of a rapidly changing world. Germany's economic crisis is unfolding like a high-stakes drama with no easy answers. A country that once symbolized stability, reliability, and economic prowess now finds itself grappling with forces that threaten to unravel its fabric. It's a story that evokes a sense of urgency, one that's not just about numbers or policies, but about real people and their lives. On the surface, the situation seems dire. The sharp increase in bankruptcies, the closure of businesses, the rising debts, all point to a nation under strain. What's striking, though, is how this crisis is revealing the deeper cracks in Germany's economic structure. The industries that once powered the economy, manufacturing, construction, and services, are now buckling under global pressures. Supply chains are disrupted, demand is shifting, and inflation is taking its toll. You can almost hear the collective sigh of frustration from businesses that were once thriving but are now struggling to adapt. Yet, in this sea of uncertainty, there are still sparks of hope. Small startups are showing incredible resilience, using creativity and innovation to carve out niches in a rapidly changing market. They're embracing digital transformation, tapping into global markets, and finding ways to keep their heads above water. It's a reminder that even in the face of adversity, there are always those who will fight back, adapting, and evolving to survive. But even these small victories come with their own set of challenges. As much as innovation and adaptability are key to survival, the truth is that not every business can reinvent itself quickly enough. The question remains: how much longer can these businesses hold on before the burden becomes too much to bear? And what about the millions of workers who depend on these businesses? Their livelihoods are at risk, and with each bankruptcy, the sense of insecurity grows. As for the German government, it's walking a fine line. What's clear is that they need to act fast, but the path forward isn't obvious. Bailouts could provide temporary relief, but they might also prop up businesses that are beyond saving. Investment in infrastructure could stimulate growth, but is it enough to shift the economy in a meaningful way? Or should the focus be on embracing technology and sustainability, building an economy that is more future-proof and adaptable to global trends? Each decision carries weight, and the wrong choice could lead to even greater economic instability. But beyond the policies, what's truly gripping is the human aspect of this crisis. For every factory closure and every company collapse, there are families struggling to make ends meet, workers wondering if their job will be the next casualty. These are not just numbers on a page, they're real lives, real people, caught in the whirlwind of an economic storm they didn't see coming. The question everyone is asking is whether Germany will be able to navigate this storm. Can it emerge from this crisis stronger and more adaptable, Or will it become a cautionary tale of how even the strongest economies can fall prey to global challenges? The stakes are enormous, not just for Germany, but for Europe and the world. The ripple effects of Germany's economic struggles will be felt across the globe, affecting everything from global supply chains to investor confidence. In the end, this crisis is a test of resilience, of how a nation adapts to unprecedented challenges. It's a test of whether Germany, a country that once seemed invincible, can rise from the ashes of this economic firestorm and rebuild itself into something even stronger. The road ahead will undoubtedly be difficult, but one thing is clear: how Germany responds will have a profound impact on the future of not just its own economy, but the global economy as a whole. The questions left unanswered: will innovation truly be enough to carry the economy forward? Will the government's interventions be sufficient to stem the tide of bankruptcies? And most importantly, can the German spirit of resilience shine through when the chips are down? Are what make this story so compelling. The world is watching, and the outcome will be a defining moment in the history of Europe's largest economy.